Good morning, everyone. How's it going? I apologize for missing yesterday's aftermarket session. I was just feeling really not that great. I wasn't able to focus or see clearly or anything. So today, let's go ahead and see what happened yesterday during the session, and then we'll go ahead and look at our futures and all that to prepare for the upcoming session. So when we look at how this session went with the S&P, you can see that we talked about how even though we were opening higher, our expectation was that it might trade lower because we're starting to see weakness in the market. And that's exactly what happened at the open. You can see that we came and we crossed this blue line right here, which was the previous close, a few times before trading all the way down, finally breaking through and then bouncing off of the previous low. We traded higher back to the previous close a little later in the day. And then just in the last 30 minutes of the day, we got this strong surge upwards to close at the previous high. So once again, these horizontal levels, the supply and demand levels, are really what we're reacting off of during the day trading sessions. So since all we did was trade in the range of basically the previous day, you can see the previous low, previous high, we're completely range bound by it. So we can mostly leave these lines alone going into today. The only thing is this previous high needs to be the previous close. And then this previous close can just be a purple line. And then we might, our purple line from before is still valid based on today's pre-market action. Looks like we might add a purple line at the current level as well. So there's weakness in the market that's developing. We did surge a little bit higher at the end to close slightly higher. And on the daily graph, that just looks like a little bit of sideways movement. So nothing to get excited about. We did come down and touch that EMA8 finally. All this time it's been above the EMA8, and we've been trading sideways for so long we actually touched the EMA8. And what's really interesting here is that we also traded sideways and touched the +2 ATR Keltner channel. We traded back above it, but you can see that where we closed is now a distance away. It's about halfway, maybe 2/3 of the way between the +2 and +3 ATRs. We sort of saw that 2 days ago, but it did touch the +3 ATR during the trading day instead of +2 ATR during the trading day. So we are starting to see movement away from that +3 ATR Keltner channel, and that gives us an idea that maybe we will continue to see this come down. The other thing that we saw yesterday was a return of volume, not quite to the average, but again, it's close. So definitely traders coming back in. And what we really need to see is a return of volume that touches and goes beyond the average in order to maintain that average. Otherwise, that average is going to get pulled down, which is okay. We're going into December, so we are going to expect volume to start to dry up in December, especially those last 2 weeks when we get to the holiday seasons. But we really should be able to see at least average volume over the next couple of weeks. The other thing that we want to keep note of is that we have these horizontal levels of resistance that we're going to start bumping into even if we start trading higher. So we have this high right here, and then we have just above it this high right here. Then we have this high right here, which is confirmed that these, we can probably draw that slightly lower, okay, like that. And then this sea green aqua color line as the local high in January of 2022, what might have been the all-time high, actually. So we do have several levels of resistance to get through for us to be able to head higher And once again, once we hit a couple of these levels, we are going to need a pullback if the pullback doesn't happen right now. A lot of us have been thinking and talking about the Santa Claus rally into the end of the year. But if we look at this a little bit more closely, we could argue that the Santa Claus rally is already happening and may have already happened. So if I look at 2023, and I go just the January 2023, and I go to up to where we are now, this year we've gone up 22%, which is a huge year considering that the average movement of the S&P 500 in a single year is about 6.6%. So we're almost 4 times that right now. And then if I just look only in November, so the entire month of November, we'll start with November 1st. We've gone up 9%. We've gone up 9%. So if the entire year's average for the S&P 500 is 6.6%, and I've moved up 9% in a single month, do I really expect to follow that month with another huge movement upwards? The answer is I shouldn't, right? I shouldn't expect the month of December to significantly outperform the annual rate of the S&P 500. I already significantly outperformed 1.5 times, 150% of the annual rate in November. So am I going to follow that with another high performing month, especially given that the year is up 23%? So if I go up another 6 or 9 or 10% in December, that's going to send us way. So let's see where it goes. If I go right here and I go another 10%, that's a screaming new high at 500, all-time high at 500, which would take my annual rate to roughly 33% on the year. So I don't think we should expect a stellar December. Somewhere, if it is bullish, then it should be probably somewhere below 6.6%, maybe 3%, maybe 2%, maybe something very mild. And that would coincide with, right? That would be 1.2%. Up to this purple line would be 3%. Up to this all-time high would be 5%. So we should fall somewhere in between here, in my opinion, if we are to go to the upside in December. And if we are going to go to the downside, then we could anywhere, any of these levels, this sea green line, this blue level, anywhere in between where we are right now and this blue level would be appropriate. But again, right now, the most likely scenario on the table is a pullback, maybe trade a little higher than pullback, and then see if we can rally enough with the time left we have in the year to match some of these highs up here. So that's the scenario that I'm looking at in terms of high probability. We shouldn't expect a raging December after a raging November. And we should expect at least some sort of pullback before we could go significantly higher. But even if we don't, we could just really just flit a little bit higher, maybe hit this 470 region over here. So let's take a look at how our pre-market is doing, how our futures are doing. And we are looking down about 0.7. No, this is, 1% is 359, so a tenth of that, so 0.1 basis points. And then roughly, so random. We are down, but a random amount, not super significant. I'm not going to read too much into the futures today. If we look at the S&P 500, looks like we're just opening a little baby amount down. So nothing too significant here. We do have a couple things on the economic calendar, ISM manufacturing, PMI manufacturing. Those, given that there's nothing else really going on, maybe they'll have an effect. So we'll want to watch that during the day trading session, half an hour after the open. So it could be a good idea to just watch that first half hour of volatility, see if we react to any of these reports. I wouldn't really expect a huge reaction to these two, but again, given that there's nothing else being reported, and if we get another light volume day, then we could at least introduce some volatility. Then we have Jerome Powell speaking twice. I don't think that's going to be a significant event unless he says something to really dampen this crazy enthusiasm that we see over here. We were pricing almost 100% chance that we're going to keep rates steady. We flipped. So before we were a small percentage chance of a rate hike. Now we're tiny percentage chance of a rate cut. And then in January, same thing, small percentage chance, although significantly higher than December, chance of a rate cut. And then March, we've got almost a 50% chance of a rate cut in March. And I've already talked about several times why that to me is pie in the sky, crazy thinking based on everything that we know and see right now. So if Powell says something to crush the hopes of this right here, then we could see a reaction in the bond market, which so far has just been trading along its EMA 8 upwards. And so if we come crashing through that EMA 8 down towards the EMA 20, that could be a break of this uptrend right here and a resumption of this longer term downtrend. So if that happens, then that's going to put pressure on the markets. Or even if it's just a baby blip, we trade down to the EMA 20. That is enough pressure for the NASDAQ to start coming down. And what we see is that the NASDAQ is weaker than the QQQ and especially the Dow Jones. So Dow Jones broke out. Dow Jones broke out. NASDAQ and S&P are showing signs of weakness with NASDAQ coming down lower. So yesterday, the Dow Jones was up 1.15%, and the QQQ is down 0.25%, and then the S&P 500 is just basically sideways, like tiny amount up. So we are seeing that sector rotation that we talked about in action, leaving the growth, leaving the tech stocks, starting to go into the Dow Jones, the safer, the blue chip stocks, going into the end of the year, and also because the laggards are now catching up to the leaders. So we're definitely seeing that sector rotation happen on a micro scale, and that if that continues, then the QQQ could be the first one to break and have that pullback and drag the S&P 500 with it. The Dow Jones won't necessarily, because it is now broken out. It might just retest this level, this horizontal level that it broke out from. So it might just come and bop that and then pop back up. So if anything, if we see the Santa Claus rally, it's most likely to be in the diamonds, not in the SPY or the QQQ. So we're going to watch that carefully. We're going to expect more continued rotation going into the end of the year. So today, next week, the week after, we should see this pattern continue. Maybe not every single day, but we should see it continue as a whole. And just if we're going to focus on uptrending stocks, which we probably should since we are still in a uptrend in the markets, then we should be focusing on the blue chips or the industrials, the basic materials, the ones that we see within the Dow Jones. Okay, so that's going to be it for today, this morning. Maybe we already drew our levels. So right now it's looking like that we are opening a little lower right into this purple line right here. And we may move in the next 15 minutes, but that's not terribly likely. And then we're going to see the morning volatility. I don't think we'll get super directional, meaning that if we move one way or another, we might just move one of these well, these lines, maybe two at the most. But when we start to see at 7 o'clock, when we start to see some of those reports, we'll see how much volatility and directionality that introduces into the market. And then if not, we're just going to see, just like we did yesterday, do we break some of these lines? So if I go down to this line and break, then I'm probably heading towards the previous low. If I break this line and go up, then I'm probably heading towards the local high. And then if we sustain this previous low, if we do the same thing that we did yesterday and we keep bouncing off the previous low, then that's a sign that we're going to either move up or move down. And if we break down, that's probably going to open the floodgates and cause our pullback. I don't know if that's going to happen on a Friday trading session. So I see that more likely happening next week rather than on a Friday, but it could happen. But I would expect a more muted trading day, mostly sideways trading. Again, that's just speculation. I could be completely wrong about that. So don't trade based on speculation. Trade on what actually happens and how the price actually moves. So that'll be it for this morning. I will see you in the afternoon session.